Subscribe to Simply Bitcoin.
All right. Welcome, everybody. Welcome in. You made it to another episode of the Meme Factory Stream Test. This is Stream Test number 168. If you've been watching for any amount of time, you'll know we only do stream tests. That way we can't get shut down. It's not a real show. This evening, we're joined by Sean Harris, Rope, Pierre, Rochard, Yellow, Pedro, MTC. Say hi, everybody.
Hi, everybody.
Hello.
Hi, everybody.
Hi, everybody.
All right. Going to start this one out with an easy question for everybody. I want to see where everybody's stance is. Are you for ankle socks or are you for the thigh highs?
I'll go first. I'll go with the ankle socks.
Ankle socks. Rope, where are you feeling on this?
I've been ankle socks since like 2008. Probably not going to change.
I'm also team ankle socks. How about you, Sean?
I am halfway up the leg socks. Boy, that's how we run it. Get to the calf.
I got
Get to
you.
the calf with the socks.
I'm glad you're okay saying that opinion in public. That's very nice. Yellow, how do you feel about these socks?
I'm not stuck
Yeah,
in middle
I'm,
school in the 1990s.
I'm Europe. I'm European, so it's not even ankle. It's like lower than that. Like you can't even see the sock.
Yeah, that's what I do.
Yeah,
That's what
absolutely.
yeah, that's the way I go. You can't see the sock.
Does that not hurt your guys' toes? That hurts my toes. If I'm wearing socks like that, it just crunkles. Like my feet don't
Crunkles.
last.
It crunkles them up.
Well, you also wear a size 14 shoe, so I imagine like it's a little different for your socks. You wear like stockings regardless.
Yeah, exactly. Just sew two stockings together.
All right, let's hear from Pedro and then MTC. Where are you at on this? You got you guys going ankle socks, or you going with the higher socks, calf, knee high?
Ankle socks.
Ankle socks. MTC?
I think this is a trick question.
Is it?
Yeah, I was going to say neither, but what kind of dress are you wearing it with?
Sundress.
Heels.
Knickers with knickers.
I don't know. I remember growing up, it just wasn't an option. Going through high school, you would have to take the socks and like fold them down below your foot.
Yes,
In order
that's
to-
what I'm saying.
Simulate an ankle sock. And now,
If I'm pushed, I'd go ankle sock,
okay.
but I'm currently sporting flip flops and bare feet. So
Well, it's June or July. I mean, come September, that tune will change.
yeah, we've got 1 week of good weather here. I'm breaking it out big style.
Yeah.
Guys, we have Pierre here. Maybe we should stop talking about socks.
Yes, Greg, please get to Pierre.
All right. So, Pierre, what part of the country are you calling home these days, if it's not doxing?
Yeah, Texas.
Nice.
And you've been there for a while now. How long?
I've moved back and forth, so it'd be hard for me to sum up how many years, but most of my life.
Were you safe from the flooding this past week?
I was, yeah. I live at the
So-
top of the hill,
Okay.
but definitely thoughts and prayers for those who
Right.
were harmed by that.
Yeah, for sure.
So,
Yeah.
Pierre, for the better part of a decade, you've been teaching me about Bitcoin and cracking me up at the same time while throwing its detractors into a wood chipper. It's been impressive to watch. Everything from auditing the supply of Bitcoin to standing out in the field and measuring the CO2 impact of Bitcoin to testifying about the energy usage and energy savings of Bitcoin technology to just straight up shit posting. And it's been a joy to watch. I'm wondering who the next target of... I have some idea of who it is, but I'm wondering who the next target of your jibes is going to be.
Yeah, that's a good question. So last week I was on Preston Fish's podcast and I debated Jim Chanos. But he doesn't even disagree on Bitcoin. So I think that's the challenge now is that there's nobody who will come out and be like, Bitcoin's a Ponzi because it's too late for that kind of opinion. And so they'll try to find I think closer angles. So my biggest critique of Elizabeth Warren and how she attacked the Bitcoin mining industry is that she did not do it with any kind of reasonable strategy. What I would have done in her place is I would have said, "Hey, I think Bitcoin is very volatile. It's very risky, but it's very decentralized. So it's very interesting. But Bitcoin mining is not decentralized because you have these large mining farms, and I have a problem with that. I don't have a problem with you mining at home, but I have a problem with these giant facilities." And to drive a wedge and a division within the Bitcoin community, because some people would hear that and they'd be like, "Oh yeah, I see where she's coming from. Decentralization is important, so she's right. We should ban these large Bitcoin mining facilities." And she would have accomplished more than just coming out and blasting everything, right? And saying, "Hey, look, I hate Bitcoin. I'm building an anti-crypto army, and we're going to try to ban Bitcoin." And that's it, right? So I think going forward, they'll try to find more nuanced angles to try to knock Bitcoin or slow it down. But for the most part, I think that basically, from a intellectual perspective, we've won so far. Until what's going to happen is that there's obviously going to be some kind of financial crisis, and maybe some will try to scapegoat Bitcoin for things there, or what they'll do is they'll try to say, "Oh, Bitcoin's growing so big, it's going to cause a financial crisis. So you don't even need to have a financial crisis happen. They'll just point to it and say, obviously, it's now today. Now it's a north of $2 trillion market cap, right? In 10 years, let's say it's $200 trillion market cap, and so they'll kind of just point to it and say, well, it's too big. But it's going to take a while for the critics to have something else to go after, because the energy stuff, it's not just my video about the carbon emissions that kind of killed the energy stuff. I actually think most of the credit goes to the ChatGPT AI stuff, where now it's like, okay, well, this is consuming even more electricity than Bitcoin mining, and so what is if you're opposed to AI, you're really more of just a Luddite and not some kind of environmentally, savvy person. So who knows? It's not like when I started out in Bitcoin that I predicted all of the adventures and side quests that would come along with it. So I'm very open-minded as to what comes next in terms of, disagreements.
So my two big takeaways from that are that you're saying in 10 years will be at 12 million per Bitcoin, which is bearish on your side. And from your own predictions,
What models are you using?
You're one.
I'm using the PR model.
1 trillion per coin model, Pierre.
Yeah. Well, I'm speaking in real purchasing power terms, right? If we talk about it in nominal dollar terms of, add on the hyperinflation from lowering interest rates way too early, it could definitely be greater than that.
And the other thing I took away from that is that I should be using the Wayback Machine to go look at the articles defending the electricity use of ChatGPT and other AI systems and just replacing ChatGPT with Bitcoin, doing a find and replace. Does that sound about right?
Well, the thing is that not a whole lot of them got written because not a whole lot of articles attacking AI's energy consumption got written, right? And so I think that it really comes down to what is the value of the result. And with Bitcoin, the critics, their real critique was that to them, Bitcoin has zero value, right? And so it doesn't really matter how energy efficient it is, or, if it balances the grid or anything like that, because to them, it's like, it's all just a waste to begin with. But with AI, the results are so easily understandable of, oh, okay, I can generate new cat images. This is clearly of value to society. Um, and when we were lobbying the government for Bitcoin mining, a lot of the conversations were not about Bitcoin mining. They were about Bitcoin itself and about how valuable Bitcoin is. And really that's what caused the conversation to shift from complaining about Bitcoin's energy usage to asking, "Oh, how do we set up a strategic Bitcoin reserve?" Because now you've like convinced us that this is going to increase in value.
And how have those conversations been progressing?
Well, Texas passed the bill, so they're going to buy $10 million worth of Bitcoin and put it in the reserve. So I think that's probably only the beginning, right? That eventually it'll be
10
10
million,
billion.
you said?
10 million. Yeah.
Million.
Gonna pump those numbers up.
Dollars. $10 million.
And dollars. And 10
10 million Bitcoin, that would be cool. But
Be awesome. I don't think Texas has that kind of juice yet, though.
they could raise our property taxes.
I guess they could. Oh man. Pierre, I am curious to know. No, I'm not curious to know. I know we've got some viewers that don't really understand the Bitcoin as like a Bitcoin mining is like a battery essentially for power generation, where it can be turned off and turned back on again if you have areas that need power, like in an emergency. I was hoping you might be able to expound on that a little bit. And
Yeah. So really the challenge, especially here in Texas, is that both the power generation and the power consumption are seasonal. So, for example, we generate more solar power during the summer because there's more hours of daylight, um, and we also consume more electricity during the summer because it's hot, and most of the electricity consumption is for air conditioning here in Texas. Um, then off summer, right? So during the fall and during the spring, there's actually too much electricity being produced. We've got lots of wind turbines, and so you see prices actually go negative sometimes. So Bitcoin mining does two things. One is that it consumes the extra electricity during the off-peak times, and then during the summer, during the day when the sun is setting and all of the solar is going to zero, then the Bitcoin miners turn off until people turn off or the air conditioning stops being used as much because the air temperature outside gets cooler, right? So, in August, like it'll be 9 p.m. and it'll still be 110 degrees Fahrenheit outside. And so that's why people are running their AC at night. So Bitcoin mining, it's really about balancing that supply and demand that's very seasonal. And that's pretty much it. I mean, it's not like it's problematic in any way other than from a narrative perspective, the XRP Ripple people got upset because they always assumed that their approach to centralized issuance and not having any proof of work and just having a permissioned set of nodes would be competitive by virtue of all of the climate change, climate crisis narratives, right? That, oh, well, institutional investors like BlackRock will never invest in Bitcoin because it's not ESG compliant. And they kind of assumed that argument would carry the day. But they really it didn't work out that way because people like BlackRock, they care about ESG to the extent that it helps them make more money. But if it doesn't help them make more money, then they don't talk about it, and that's what's happened.
it seemed
I have a question. You said like obviously we know that mining is a seasonable thing, as you said. On summer, most of the the mainstream, like most used tactic is to you guys are part down on summer, right? So most of the times, and um, how are you keeping like your margins on summer, like without those miners working? And are those miners not working due to lack of power or just protecting the chips because it's too hot? What's the main reason behind it?
Yeah. So there are actually, there's two ways to go about it. One is that, first of all, if we look at why are they turning off, it's really because the marginal cost of electricity is greater than the marginal revenue of mining. And
Okay.
so you would be operating at a loss and paying to mine Bitcoin if you did not turn off. Um, Second is that the depending on what company, they might have a hedge in place, and so they might say, okay, well, we're gonna have if the power the power price goes very high, then that hedge will actually pay us and compensate us financially for the opportunity cost, right, of having been on. But it's not the whole summer or so. I think
Yeah.
usually they're off like 10 to 20% of the summer.
On top of that, have you guys or any big mining company out there is experimenting with gravity batteries? I don't know if you've seen those batteries now being implemented mainly in China, where they use like old mining facilities that are really deep, and they're making gravity batteries basically in order to store
Never
stuff
heard
like
of it. Yeah,
that. Really, okay.
I don't know.
Is that where they just lift a really big weight, and then
Yeah,
like when they stop generating the power, they let the weight go and generate electricity on the way
slowly.
back
Yeah,
down?
and it
Okay,
turns a generator. Yeah, yeah, yeah.
super high tech.
But yeah, I was just curious. Sorry.
Yeah, no, I not familiar with that. I'm familiar with like the pumped storage, right, where they'll pump water upstream into a
It's
lake.
similar. It's
Yeah,
similar, but like with weights, like
yeah.
concrete blocks, basically. Yeah.
No, there's 8 gigawatts of batteries, but they're like Tesla power batteries. They're not like anything special.
Lithium, not gravity.
Yeah, highly flammable.
Just add a little water, put it out. What's wrong with that? All right. So the news item for the day recently has been Bitcoin treasury companies, and I have mixed feelings about these, Pierre. I really enjoy seeing the game theory play out that publicly traded companies are buying Bitcoin, and it seems like more and more of them are doing this. The problem I have with this is that it seems like there are companies that don't produce anything that now are buying Bitcoin and making the purchase of Bitcoin their product. I want to know what you think about all this and where you think it's headed.
Yeah, I guess.
And how is that a speculative attack to the
Yeah.
dollar?
So it's funny because I have the opposite concern of companies focusing too much on their operations and not enough on buying more Bitcoin. Um, so uh, the in terms of why is it a speculative attack on the dollar? It's because these companies are a vehicle to leverage up and to borrow dollars to buy Bitcoin. And so when you look at the statement of cash flows for a company, there's really three categories: operating cash flows, financing cash flows, and investing cash flows. So when you have a company that has a really great product, let's say Apple, right? Uh, Tons of operating cash flow, lots of extra cash flow from that, right? And then they accumulate cash on their balance sheet. Um, and then you've got companies and high growth as well, right? So that operating cash flow is growing over the years. Then you've got a company like MicroStrategy back in 2020, I think their growth was basically sideways for the operating cash flow. Um, and then you've got companies that either have zero operating cash flow or negative operating cash flow. Um, on the financing side, so the financing cash flows that comes from selling stock, right? These at the money offerings of selling shares, right? Printing shares, um, or issuing bonds, right? Convertible bonds or any other kind of debt, and bringing in financing and bringing in cash that way. And then the investing cash flows that for a treasury company you would expect to be negative in the sense that they are putting the dollars that they raised either from operating cash flows or from financing cash flows and investing that into Bitcoin, right, onto their balance sheet. Now the complaint about the basically what percentage of the Bitcoin accumulation is coming from operating cash flows versus financing cash flows. I see that as just a question of managerial skill, meaning that ideally, you're if you have strong operating cash flows, that means that you don't have enough debt, right? That means that you need to issue more debt so that you buy more Bitcoin, and then your interest, the cash you have to pay on the interest, is basically absorbing the operating cash flows. And then you still are doing everything of printing lots of shares, printing as many shares as you can to buy more Bitcoin. And so, like the idea that, oh, if you have a strong operating business, then you don't need to tap the financing side as much. I think that is very problematic. And you might as well just be like Tesla, right? Of like, oh, we're going to buy a little bit of Bitcoin and then we'll ignore it. But it's a paradox because basically, the reason why Apple is not doing what MicroStrategy is doing is because they have too much success in their operations. And so you need to have companies that basically have given up on growing their operations, given up on, being the next NVIDIA or whatever, and throwing in the towel and saying, okay, we'll do the quote unquote lazy thing and we'll go buy Bitcoin. Right. And then what happens then is that they stumble into success because Bitcoin's value goes up, their stock value goes up, they start issuing more shares, they might buy more Bitcoin, they start issuing debt, they buy more Bitcoin, Bitcoin's value goes up. And so it creates a very successful flywheel that is completely unrelated to whether their operating business is successful or not. And I don't think that's a problem at all. I think that to me, the problem in capital markets today is that operating businesses are completely overvalued because they've essentially become monetized, right? Where instead of holding dollars, because of inflation, people have to go invest their dollars and they go buy an index fund of companies, all of that, have operating businesses, right? And so they bid up the price to earnings multiples on all of these operating businesses to where like those multiples don't make any sense at all. I won't cite any names because I don't want the SEC to sue me. But I think that it's the operating businesses that are overvalued in the stock market. And part of it is just momentum, right? Like you would assume that Wall Street's mandate is to maximize profits, right? So that they would be chasing any asset that's going up in value. And yet for the past, let's say for the past 16 years, they've looked at Bitcoin and they've said, well, blockchain, not Bitcoin, or oh, we're interested in picks and shovels plays, just like all sorts of ways to rationalize not buying Bitcoin. And that's in the face of Bitcoin going up in value, right? And then they're like, well, yeah, it's gone up a lot, but it's been so volatile. Normally, Wall Street is very happy with volatility, right? They make money off of volatility. but it comes down to Warren Buffett saying, hey, look, Bitcoin does not have any cash flow. Bitcoin's not an operating business. Okay. How can you provide a valuation framework for this currency that just came out of nowhere? So, it's a scam. It's rat poison, blah, blah, blah. So, I think that to me, it's interesting because your critique of failing operating businesses acquiring Bitcoin and succeeding.
I didn't call them failing. I said that they were changing the business model and the way that they were pitching it to that they're. I didn't say there's anything wrong with it. I'm saying that there is, and I think you addressed my concern with it being a managerial risk, a skill risk issue. Right. So like my problem is I'm looking at this and seeing like, oh shit, they're gonna do FTX again.
So that's a really interesting question, right? Of FTX again, or Enron, right? So Enron was a giant accounting fraud, right? And so you could imagine a Bitcoin treasury company committing an accounting fraud where they say, oh, we've got all these Bitcoin, but they actually don't. And somehow they hoodwink the auditors. And that's basically what FTX did, right? Giant accounting fraud. Now,
one of many such instances in the history of Wall Street, though.
Right. But it's interesting that how many accounting frauds have occurred over the past 10 years in public markets? Far fewer. And the reason why is because they implemented what's called Sarbanes-Oxley, which was this act that really clamped down on the internal controls in public companies. And it had two perverse effects. One is that it just became very expensive to be a publicly traded company. And so you have more private companies that get bigger and have lots of private financing from VCs. And two is that it moved the frauds into the private company space. So like Theranos, for example, right?
Okay.
Huge fraud, but really it only impacted the VCs because in all likelihood, if they'd been a public company, it wouldn't have passed the smell test of the auditors coming in, I suppose. But maybe it would have. I don't know. But it seems to me that there's less fraud now post Sarbanes-Oxley than there was before. That said, you are still completely trusting the institutional framework around shareholder capitalism, right? Of lawyers, accountants, management team, board of directors, auditors. You're trusting all these people to and the custodian of the Bitcoin, right? Because these companies don't self-custody their Bitcoin, and you're trusting them to hold those Bitcoin and also to not blow it up, right? Of taking out stupid amount of leverage and then getting liquidated or something like that. So I think that is the number one risk is that what they call the agency risk.
We talking about the central one or somebody's ability to do things of their own volition?
What do you mean? Sorry, what?
So are you saying the agency as in the CIA, or are you saying agency as in somebody's agency to do things for themselves?
No, they call it a principal agent problem. So the principal is the shareholder. The agents are all of the people that should be acting on the behalf of the shareholder, but could actually betray him.
People
right?
with agency.
And so if you think about it from like an adversarial Bitcoin context, it's like, well, I would never invest in one of these companies, right? If you think about it from a somebody who's already investing in public companies and they are invested in a company that, let's say, is trading at a 50x price to earnings multiple, and then they're looking at Bitcoin treasury company that's trading at like a 2x multiple on the NAV, and they're like, well, actually, I'd be taking less risk by buying the Bitcoin treasury company and selling this overvalued hot stock. So it's all relative to what your frame of reference is as to whether Bitcoin treasury companies are interesting or not.
Do you
Do
think
you
that
think?
do you think that that some of these companies, because they're selling their own stock to buy Bitcoin, is that working against the shareholders because they're diluting the shareholders?
So, first of all, we have to keep in mind the shareholders control the company, right? So they elect the board of directors. They vote on the dilution. So they vote to authorize more shares to enable the management team to go out and sell those shares. And the reason why the shareholders are okay with dilution goes back to it's kind of one of the first lessons in corporate finance where um, it's does it make sense to dilute? Yes, if the value of the asset that you are developing, that you're financing, is going to outpace the cost of capital, right? So basically, is the investment you're going to make with the financing going to be profitable when you include the cost of the financing? Um, and so, in the case of Bitcoin treasury companies, if they're selling shares and buying Bitcoin, and the shares are trading at a premium to the Bitcoin, and they're increasing the sats per share, then it's really tough for the shareholders to make an argument that they are being harmed. The only caveat is that let's say you're one of the like early investors in a Bitcoin treasury company, and you have acquired 30% of the company, and you have you have a board seat, and then the company is really diluting. You're not buying more shares, and so your percentage ownership of the company is decreasing.
Mm-hmm.
And then you lose your board seat because you're losing the voting rights, right? That come with having a percentage of the shares. Um, and that I think is the only downside you could see actually happen, assuming the company is diluting accretively.
Do you think those companies will continue to be spinned off, like being created more and more, or it is like a cycles thing most of it?
Yeah, so I think that it might end up being cyclical, right? Just because like Bitcoin's price is cyclical, and so we would assume that the new emergence of Bitcoin treasury companies will be driven by the Bitcoin price cycle. Um, and I think that we're very early in the current cycle, which is, pretty exciting or
Heathen.
horrifying, depending on your perspective.
Oh, you think
Um,
Are you talking
really
about
early, really?
like halving cycle? You think we're early?
I think the halving cycles are over. So
Okay.
I think that we can throw that out the window.
Mm.
Um, the it's just too small relative to the overall size of the market. And so I think that like if I look at this bull market, like there's been two big catalysts. The first one was the ETFs.
Yeah.
The second one was Trump election. And now I think we're seeing the third one, which is the treasury companies. And so um, those are like the visible catalysts. Obviously, underneath that, you have the kind of the constant catalyst, which is normal individuals just buying more Bitcoin, right? And so I think that if you look at the data, like that is still happening. Like we're still seeing Coinbase crash when the price pumps, So there are still humans that are involved here.
Do you think
So that
that
that's
the
that's
oh, go ahead.
interesting. You said like you think we were early, so meaning we have like you're timing it with we're gonna continue to have a bull market due to maybe mainstream markets pick up again.
Yes.
How are you justifying it?
Well, so uh, okay, so I think the biggest factor once you get rid of the halvings, right? I think the biggest factor was the halvings in the past. Going forward and recently, I'd say even since the last cycle, the biggest factor is US dollar monetary policy.
Yeah.
And so when you have a situation where the bull market has begun at relatively high interest rates, right? North of 4%, which I think is low, but you know, it's been 0% for quite a while now. So it's high relative to where it was. Um, and you have the president publicly bullying the Fed chairman to lower interest rates.
Mhm.
That I think is a catalyst for more tailwinds, right? For Bitcoin's price. More dollars are going to get created, and so that's just going to make NGU. The other part of it too is that the, there's this view that the financialization of Bitcoin suppresses the price. I think that's true, but I think it goes in both directions. So I think it suppresses it up and down. And so, like, the biggest drawdown we've had so far has been 30%, negative 30%, right?
Yeah.
So I think that
But isn't
we're
that
gonna
typical during a bull market?
no, it's pretty shallow. And so I think that it's very what it's going to end up looking like is sideways to, you know, maybe negative 30% and then up and then sideways downish and then up, right? And just keep that basically tracking underlying adoption plus you know, humans being herd animals, so we all FOMO in at the same time, plus the financialization where basically you know, you've got like all these people writing covered calls on their Bitcoin. So they're selling volatility, and then the Bitcoin price goes up, and they are getting their Bitcoin called, and they're forced to sell. So you have people who are forced to sell when the price is going up, and that helps stabilize the price. Like you actually, I would argue that Bitcoin adoption on net has been slowed down by the manic past cycles, right? Where the Bitcoin price goes up a lot, it brings in a lot of people, and then it crashes, and then nobody wants to touch it for like 2 years, and then it starts going up again. And so, if you have if you just have Bitcoin kind of slowly grinding up, I think that you end up with a lot more adoption over 4 years than if you have it do a whipsaw. And I think that the all of these derivative products around Bitcoin create natural buyers and sellers where if you've got lots of people writing cash secured puts and then the Bitcoin price goes down and then they get put Bitcoin. And so then they're forced buyers of Bitcoin when the price is going down. So I think that there's all sorts of really good feedback loops now because Wall Street is building out these products and they're attracting massive amounts of capital. That it's going to completely change the market regime under which Bitcoin's trading.
Pierre, you said Bitcoin is cyclical. So if we're getting rid of the halving cycle, what's the cycle that replaces it?
I think it just goes straight to a U.S. monetary cycle, just like real estate, right? Like,
Okay.
so then it's like 8 years, 12 years, you know, just same thing with the stock market. But it's also going to depend on, you know, how do they want to do the strategic Bitcoin reserve? They could decide like we're going to do up only from now on, right? So if Bitcoin goes down, we're going to buy a bunch of Bitcoin and print dollars.
So basically, you're saying we're grinding up for this next 7 years.
Potentially. I mean, look, I'm not asking you to make any kind of retirement decisions, but
No, of course.
that's I think that's more likely than to say, oh, Bitcoin's going to go up to you know, $1 million in December of this year and then crash down to you know, $100 or $200,000 in next year.
So going back to the Bitcoin treasury companies, you know, a big talk is MNAV, right? That's what everyone talks about. And one thing that I kind of struggle to wrap my mind around is how can an MNAV keep growing? Because in my mind, I've always been of the idea that everything is going to zero against Bitcoin, right? Like price of homes, price of crypto, even price of stocks. And now you have these stocks that are loading up on Bitcoin, and some of them have been able to grow their MNAV relative towards Bitcoin to the underlying. But it's something that I'm trying to kind of create a mental model of myself of, there have been some cryptos like Ethereum who outpaced Bitcoin. Everyone, there's a lot of the Ethereum people said, oh, the flippening was going to happen. It never happened. And then since 2017, it's just been down, down, down. I mean, there's been a little areas of outpacing, but really it's just been a down trend since then. Do you think that these Bitcoin treasury companies can continue to grow their MNAV indefinitely, or do you think that they also trend towards at least par, maybe not towards zero towards Bitcoin, but at least towards par with Bitcoin?
I'd like to add to this question, if I may. Do you think
It's
do you
already
think
a lot, but go on.
Yeah.
do you see an equilibrium being established somewhere between PE ratios and MNAV?
Ooh.
I was going
Okay.
to have that as well.
Yeah, so I think the MNAVs grow based on like when the Bitcoin price is going up a lot, that it causes there to be momentum in the stock price. That is, if you look back, I think for the most part it's going to be temporary, right? Where the MNAV expands because people are euphoric and kind of piling in. And then it contracts either because of a bear market or because the company is closing that gap, right? They are acquiring the Bitcoin, selling shares, and so that's grinding down the MNAV. I would argue that that's just them growing into the MNAV, right? That is that the MNAV, you could look at it and say, if you're trading in a 2x MNAV, that is the stock market telling your company they want you to double the amount of Bitcoin that you have on your balance sheet, and that you need to go out and do that. And so that by selling stock, right, to drive it down to par, to 1x. Now, the problem is that there's factors on the other side that are pushing MNAV above 1x. The main one, I believe, is leverage. And so if you were to be trading at 1x and you have leverage on, that would be an irrational market, because unlevered you trade at 1x. So, it wouldn't make sense that the leverage, or even if you're not leveraged, if you have the option to be leveraged in the future, you should trade at a premium. And that's a real asset. Like, so that's an asset that, for example, IBIT, the ETF does not have. They cannot lever up the trust vehicle that holds the Bitcoin. A corporation has the option to lever up to buy more Bitcoin in a way that does not dilute the shareholders. Because then what happens is that the shareholders capture all the value between what is the cost of the debt that they're using to lever up. So let's say it's 10%. And then what is the CAGR for Bitcoin? If the CAGR is, let's say, 20% or 40% or 50%, then you do CAGR minus cost of capital equals excess spread that accrues to the common stock shareholders. And so in that situation,
we're getting mathematical today. I like it.
Well, look, and so that means that the MNAV has to be greater than one, assuming you think the Bitcoin price is going to go up more than the cost of the debt, right? And so empirically, the market does believe that, and so that's why I think that even at scale, large companies like MicroStrategy are trading at a 2x MNAV. Now, when does that grind down to a 1x? Only when you have so much competition in this trade that it causes the dollar to collapse, right? Because everybody's borrowing dollars, selling dollars to buy more Bitcoin, and you have hyper Bitcoinization and the final victory of Bitcoin over the US dollar. And then at that point, the companies would be trading at a 1x MNAV, and they would be trading Bitcoin denominated, right? And if they want to have a greater than 1x MNAV, they would need to have some kind of operations, right? Operating cash flow at that point. Because at the end of the day, if you look at, okay, how can we increase the value of our assets more? Is it by investing capital into our operations, or is it by buying Bitcoin? And I think that 99% of the time it's by buying Bitcoin. 1% of the time you are Nvidia, you basically have a monopoly on some market, and you know, okay, sure, then yeah, I guess that can outperform Bitcoin. Until Bitcoin's growth rate decreases, right? So when we go from a 50% CAGR today to a 10% CAGR in the year 2050, then you could argue that, okay, there's lots of operating businesses that are now going to outperform Bitcoin because Bitcoin is at full adoption, right? There's just not more balance sheet to buy Bitcoin.
How long do you think Bitcoin will sustain a 50% CAGR?
Arguably, we're not sustaining it, so we're more down to like 40% at this point. Yeah, I don't know. I don't know if it just slowly drifts down or if it's like Parker Lewis, you know, like gradually then suddenly, right? Where like one year we have like 10,000% CAGR because everybody just rushed for the exit doors and dropped their dollar bags. I've been predicting that for the past 10 years and it hasn't happened yet. So I don't know if I'm wrong or if like I just need to be more patient.
So do you think if say there was a company of memers that had a podcast that had an LLC, should they go out and say, you know, what are we doing with this podcast? Why don't we just figure out a way to leverage up on some Bitcoin?
Yeah, you know, I'm looking up the ticker symbol meme. I don't think it's taken. So
Yeah, but then we gotta get somebody to take us public at that point, right?
You can just do things. You just gotta hire lawyers. You file an S1.
You can't just do things.
Yeah,
Pierre.
Yeah, you can.
You don't need anyone's approval. It's permissionless.
I like that. I like that.
So in that, one of my main not fears, like I'm cool with it, but futures that I'm seeing coming is
What are you cool with, Yellow? What is it?
I'll tell you now. Like the normalization of the finance bros coming into Bitcoin and all that products, diluted products becoming normal and everyday mainstream Bitcoin is that. Like in that kind of future, where does peer-to-peer custody Bitcoin, like old school Bitcoin stands, and where it's going to be? Like, do you think it's going to be like we might have like a premium or on our peer-to-peer Bitcoin against those products? And once again, we finish the journey as we started, like as the ones in the fringes, or how do you see it?
Well, I think the only way to get people to spend their Bitcoin is, or you know, at scale, really, is to get to full adoption, right? So anything short of that, people are like, well, I'm going to hold my Bitcoin because it's going to get increase in value, and so you know that said, though, like obviously, you know, at $100,000, everyone was complaining of who's selling right now. Oh, it must be manipulation by Wall Street. And what was happening was that people who bought at or mined Bitcoin at $1 or at $10 or at $100 or at $1,000, they're cashing out, right? Pardon to use that phrase, because you know they're cashing in into the fake currency. But look, they are paying off their mortgage. They're buying a Lambo. They're donating to their charity, whatever it is. That's the wealth effect. And so the way to get people to part with their Bitcoins is through the wealth effect of the price going up. The other thing is that we need to change the tax laws here in the U.S. so that you don't have to keep track of capital gains when you're making, you know, small dollar denominated, right, small payments, right? So if it's like less than $700, you should be able to just spend the Bitcoin without having to report a capital gain or capital loss. Now, in terms of like the animosity towards the suits and the financial system, I just don't share that, right? Like I don't share it culturally, perhaps because I started out my career in public accounting. I dressed business casual for years. I don't have any. I went to business school. I don't have a problem with the legal system or with the financial system or frankly with shareholder capitalism. I actually think that public companies and capital markets are why human civilization ever got to a point where we're able to have the technology that enables Bitcoin, right? If you look at semiconductor technology, to build a fabrication plant, you need to get billions of dollars worth of capital together. And the only way to do it is through a limited liability C Corp with publicly traded equity, that it's going
But
to,
Pierre,
yeah.
sorry, I have to stop you there. But you know pretty well that like we are all capitalists, and those guys are also capitalists when it's a bull market and everything is fine. When a crisis comes in, immediately they become like Marxists. Like they stop being capitalists, and it's like a
Billion.
hybrid kind of thing that
Our risk exposure.
everyone else that knew the rules until then, they're like, what the fuck now? What the guys are doing,
Yeah, so the Federal Reserve will have to buy Bitcoin to bail out Wall Street. Right.
Huh.
And so, you can look at that and say, oh, well, isn't this what we were complaining about? I'd say, well, it's also kind of the solution, right? Where eventually the dollar is just one for one backed by Bitcoin. And look, like the problem with the bailouts, to me, the problem with the financial crisis and the bailouts and all that, it was not about that part of it. It was really about the quality of the collateral, right? That to me, real estate finance is fundamentally broken because you're financing an asset it's not even it's not a capital good. It's a long-lived, durable good, consumer good, right? You are consuming your house every day, and you have to put more dollars in it to keep it maintained. And so, like, there being a bubble in the real estate market, I think is a huge problem, mostly because of the depreciation on the asset base. And so with Bitcoin, you don't have the depreciation. It bounces back, right? So if you've held Bitcoin longer than 5 years, you've never had a loss. And so 5 years is very short in the world of finance, at least. And so I don't, if the Federal Reserve has to like bag hold Bitcoin for 5 years and then sell it off for a profit, it's probably good for the financial system. But that's kind of the risk on the downside, is thinking about, okay, when Bitcoin price crashes, Wall Street needs to get bailed out. I actually think that more realistically, what will happen is the opposite. That Bitcoin's price is going to go up so much that Wall Street will need to get bailed out. So, for example, we saw this happen with Metaplanet. There were lots of people shorting this Japanese stock, and the Japanese stock, they're buying Bitcoin, and the Bitcoin price is going up, the stock price is going up, and then they get short squeezed. And then what happens? They essentially got a bailout, right? Because the Tokyo Stock Exchange steps in and says, oh, well, you can't trade this stock. We got to let things cool off. So there's market intervention happening. And so I think that I think that was a very small preview of what we're going to see happen. People thinking that, oh, Bitcoin's tulip mania, it's Beanie Babies, I'm going to short it. And they're going to get wrecked. And then they're going to say, oh, I need a handout from the government. I think that's far more likely. The other form of it is that, really in a positive sense, where you have a portfolio manager who they need to be earning 8% or even 10% or 12%, and they're only earning 4%. because Trump made Jeremy Powell lower interest rates, or Trump fired Jeremy Powell, right? And interest rates are lower. And they're making lots of bad investments. And so the bailout they need is, well, I'm just going to buy some Bitcoin for my portfolio, and that is going to juice my returns up enough to pay off the obligations, which is retirements for teachers and firemen, right? Covering insurance losses for floods and fires. Like those are all good things where, because Bitcoin is going to find its way into these financial portfolios, that it's going to bail out the insurance industry and the investing industry.
And we've talked about Bitcoin being a Trojan horse for years. I guess this is just another way that it's, eventually as
But
everyone...
is it really even a Trojan horse? Because it's not like it's going in there and destroying the city. Instead, it's saying like, oh, we can fix the city.
Well, it's fixing the city for the people.
Yeah,
Almost like, but it's destroying it for the ones holding the people hostage, right? Like that's what it's doing. It's destroying the bad system.
I think very narrowly the central bank.
Yes, exactly.
And so, like, people will say, they'll have lots of animosity towards bankers, towards lawyers, towards corporations, and to them, Bitcoin is a way of sticking it to the man. And I'm with them on that journey until we've stuck it to the central banks, and then I'm like, I don't really care about the rest of it. Like, I think the rest of it actually works pretty well. I haven't heard any better alternatives. Their alternatives are like either utopian, oh, we'll just be in a hippie drum circle, or they're like the state's going to control everything, and communism is really great.
Yeah.
Pierre, we are dangerously close to the end of our hour this evening, and I want to make sure you have time to tell everybody where you're working these days, what you're working on, where they can find you.
Yeah, so I'm a CEO of the Bitcoin Bond Company. There's nothing to it from a public perspective, but you can certainly continue to see all of my Bitcoin-related thoughts on X at Bitcoin Pierre. And just keep stacking BTC. Don't get distracted.
Rusty, you have a question?
No, I joined late, and normally I join late, wait for like a awkward moment of like not good information or whatever, and then jump in with a joke or whatever. But that was just all gold. I just wanted to say good morning before
Hey,
you
thank
left.
you.
Yeah, morning. Good morning, Pierre.
Thanks,
Good
Rusty.
morning.
If you were looking for an awkward moment, you made it. Thank you, everybody, for joining in. And I hope everybody stays safe, has a good night, and do what Pierre says. Stack Bitcoin. Don't overthink it. Have a good one.
It's not that complicated.
It's not that complicated.